Hi there folks, welcome to this week's weekly forecast, the new look weekly forecast, which I'll show you more about in a moment. Okay, so this week we are kicking the week off in a big risk off theme. Risk off basically means that the risk assets, the stock markets and so forth, they are coming under pressure. We've actually broken through some key levels in the S&P 500, now trading below the 50 period moving average, breaking out of an ascending channel as well. So stocks are under pressure, and we're also seeing some events out in China, which is not helping the situation there. In a company called Evergrande, it's like a $300 billion company under big pressure as it's failing potentially to meet some of its bond coupon payments, and that's having ramifications into global stocks as well. China are actually off today, so it will be interesting to see what happens over the next couple of days when they all come back to their desks out there. But certainly we risk off at the moment, and that's basically reflecting here in what you see in the currency markets. This is my faithful momentum meter. It basically tells me what currencies are strong and what currencies are weak. I'm a trend follower. I want to buy the strong currencies and I want to sell the weaker currencies. Of course, it doesn't predict the future. No such indicator does, but it does give me a good picture on what's happening at the moment. And you can see here, these two currencies up here at the moment. That's the US dollar and the Japanese yen. Now the Japanese yen is a low yielding, safe haven currency. Normally when the markets are going to risk off, the Japanese yen sees some repatriation and the Japanese yen pushes higher. Also seeing some safe haven flows moving into the US dollar at the moment. That's the green line there. I've coloured it green for the greenback. So basically the dollar and the yen are both the strongest currencies at the moment. And look here what's happening to the Canadian dollar, this purple line down here. Canadian dollar is on a tear to the downside. All is coming under pressure. Commodity prices in general are coming under pressure as well. So that is a currency now that is under a certain amount of pressure. So remember, if you're selling the weak currencies, you'll be selling the CAD and possibly buying the Japanese yen, something like that. Also the British pound down here, that's the white line, that's under pressure as well this week. Lots of news releases this week. MPC, that's the Bank of England, they meet this week as well. Pound is under a lot of pressure this week, basically taking the brunt of the dollar strength. And you see here in the middle there, you've got the euro. The light blue line is actually behaving quite well at the moment. It's reasonably stable. So the euro is not having the big knock-on effect that you'd expect with such a strong dollar. Australian dollar is again under slight pressure as well. Commodity currencies, maybe that's a currency that could come under pressure this week. Right, as I say, we've got a new look weekly report, and I'll show you that now and show you how you can access it. Okay, so if you head over to the forexsignals.com website, that's our website, picture of me there, scroll right on down to the bottom. Here you can see all our free tools. You've got the lot size calculator, profit calculator, you've got some pivot point calculators there as well, talks about our different strategies. Over here on the left, you'll see it says the Forex Forecast. Click on that and it pulls up our Forex Forecast. Now you can elect to have this sent direct to your email address each and every week the moment it's released. Just fill in your email address there, or you can access it here on the site as well. We just scroll on through and see exactly what we're looking at this week. So looking at the Australian New Zealand dollar, that's one of my picks this week. I've been selling this trade now for a number of weeks. It's in a great trend continuation, having pullbacks and then allowing for entries as well. We're looking at continuing on with this trend to the downside. Both these currencies are normally quite correlated, both commodity currencies. At the moment, the Australian dollar is underperforming more so than the New Zealand dollar. Next time out, the RBNZ may be moving their interest rates. That's certainly the talk of the town. Australian dollar is coming under pressure as the problems in China. Australian dollar often seen as a proxy for the Chinese yuan. Commodity prices, iron ore is down about 75% in the last 3 months. So big commodity pressures mounting on the Australian dollar as well for trend continuation. The fundamentals actually agree with the technicals on here as well. Okay, and there's the chart as well. We've had a nice pullback for continuation. And if you look also, Max is looking at a gold bias. He's looking at a gold bullish bias, looking to see the support zones that we've come into in the gold markets. You can read more about it, as I say, by getting your hands on the weekly report. Okay, Max has also put out his weekly commentary as well, the things that he's mainly looking at as well, so it's certainly worth paying attention to that as well. Again, it's all pretty much a risk-off theme as well, same as me. I'm looking at the risk-off sentiment likely to continue this week. The US finds safety flow bids. So basically the US dollar is their bid because of all these risk-off plays that's happening at the moment. It's a very busy week in terms of central bank decisions. And of course, we've got the Fed with their rate decision midweek. So we're expecting, or I'm expecting, the dollar to maybe remain reasonably well bid supported in the run up to the FOMC, which is out on Wednesday. I also talked there a bit about the problems going on there in China as well. So we're looking at risk off for this week, and we can play the currency markets accordingly. Right, now let's jump on to the screens, look at a couple of charts, and then look at the economic calendar, which you can also access from the forexsignals.com website, scrolling down to the bottom. Okay, let's go. Okay, let's start off by looking at the dollar. Now, this is the dollar index. The dollar index is called the DXY, basically a basket of currencies pitching the dollar. I think it's about 6 currencies in the basket, alongside the US dollar. You see the dollar has been in a tear to the upside. Now on my screens here I have 3 time periods. We always like to use the top-down analysis approach. Look at the bigger picture and then zoom in to the lower time frame charts, looking to time our entries. See here I got the hourly on the left, the middle is the 4-hour and the daily. So we've got a big move up pretty much since the beginning of September in the US dollar, which came in around here. This is the daily chart. You'll see that the dollar has been basically in bid mode pretty much since the beginning of June, summertime. And if you look at the measuring tool here, you'll actually see that the dollar is actually up over 4%, 4.25% since that time, and that's basically been due to all the taper talks that we're hearing out of the US. However, do be aware, if you are buying the dollar, we are coming into a double top resistance. Often these double tops are respected. So if the dollar is going to continue, and if it is going to push to new heights, we do need to get past this really important level. So you may see a bit of consolidation, certainly into FOMC this week, to give us more clues of what's going on. So be aware of this level. Let's have a quick look now at the stock market. As I say, we are moving into big times of risk off at the moment. Certainly here on Monday, we're seeing some shake-ups of the global stock markets. So let's have a quick look at the S&P 500. Okay, so this is the S&P 500. Again, let's just drill out now to the daily chart. You see we've been in an ascending channel pretty much all of this year, making higher highs and higher lows as we go. And every pullback that we've seen in the past has soon led to a new high. Now, this pullback has got my attention for a couple of reasons. First of all, we've broken through now the trend line support. But more importantly for me, I think, is that we've now traded through the 50-period exponential moving average. I know the big banks love to look at the 50 and indeed the 200 moving average, but today's the first day we've actually broken through the 200 moving average. Now, it's important to see whether we close below here for a couple of days. A couple of times we've touched it in the past, but we haven't been below there for very long. So this week, I think, will be important to see, indeed, if we do keep price under the 50 moving average, it could indeed lead to a bigger correction. That, of course, remains to be seen. Now, of course, the stock markets, the risk on, has knock-on effects in the currency markets as well. When markets go into risk off, that's when markets are basically taking less risk. Normally, the Japanese yen and the low yielding currencies like the Swiss, they tend to do better. So maybe looking at selling the yen crosses, so selling anything against the Japanese yen, may be a play this week. So let's have a quick look at the Australian dollar against the Japanese yen. You'll see now today, just as we kick the week off, we've now broken through the key support zone, key support level here at around the 79.50 level. We're now trading through down here. Australian dollar is looking weak across the basket of currencies. Not such good job numbers out there this week as well, or last week I should say. The Australian dollar is coming under pressure. We're also seeing a drop in commodity prices, iron ore and so forth, all weighing on the Australian dollar. So this has now broken through support. So the path of least resistance for this currency pair is lower, and we are looking at potential targets down here around the 78 zone for the next support zone. Remember, often when levels of support or resistance are breached, they become the reverse. So old support becomes resistance. If this now does pull back over the next couple of days or so back into this sort of 79.50 zone, 79.50 to up to 80, then that could be considered potential resistance, and therefore maybe a selling opportunity. But of course you need to apply your trading rules to that. Let's have a quick look at the economic calendar. We do have quite a lot out this week, so you certainly need to be aware of what's afoot. Let's have a quick look. Okay, so if you go over to the forexsignals.com website, scroll down to the bottom, you'll see the Forex economic calendar. Click on that, absolutely free, and then you can basically review what's coming out this week. As always, the best way to read these, or the way to read these, is the red key indicates a high impact, likely to have a bigger effect on the markets, than a low impact, which is normally here in green. I like to look out for the next 7 days as well, and then we scroll on through. So the biggest event this week will be here on Wednesday. It's the Fed Open Market Committee, the FOMC. This is when they will decide on interest rates. Now, of course, it's unlikely that they'll be moving interest rates, but this press conference here that's following on from the rate statement potentially will give us clues on to what the Fed is doing in terms of its asset purchase reduction, also known as tapering. If indeed we see a move in that direction, then you are going to see continued strength going into the US dollar. And as I've said, I do believe that the dollar has pretty much priced in a tapering at some point, but the actual news itself, or the run up into it, I think could see still some bid momentum for there as well. We've also got a rate decision out of the Swiss National Bank as well, so we need to pay attention to that. And we've got some European PMI data. Markets love a PMI data, Purchasing Managers Index. It's basically a survey of the business leaders, asking them, are they confident about the economy going forward? Are they employing staff and so forth? Central bankers love a PMI data. And of course, later on in the week, we've got the Bank of England, their rate decisions as well. So very interesting to see what the Bank of England, they've been sort of getting a little bit more hawkish, sort of upward pressure on interest rates, or easing back of asset purchasing as well. So that's going to be a big event for the pound later on in the week. So a week with lots of central bank decisions as well. So make sure you check out the calendar. Maybe some money making opportunities, but also to avoid some situations and have a big release just as you place a trade. You know, sometimes it can catch you out. So make sure you're aware of the news that's coming out before you start playing in the foreign exchange markets, the Forex markets. Okay, hope you found that useful. Don't forget, you can make sure you don't miss a trick by plopping your email address in there. We'll then send you the weekly forecast as and when it is released. Now, if you like the video, give me a thumbs up, give me a thumbs down. If you don't forget to subscribe to the channel if you don't already do so. And of course, follow us on all those socials. If you want to come over to our trading room, try it out, you can do so, of course. Take out a 7-day free trial. Doesn't cost you a dime if you don't want to stay. If that's not your thing, that is not a problem. I will see you next week, and have a good week.